So additional information, number one, during the year ended 31st March 2022, W Group disposed an 80%, disposed 80% shareholding in C Limited for cash, I think, which had been acquired on 1st October 2017 for a cash consideration of 1056 million, when the fair value of the net assets of C Limited was 980 million. The fair value of the non-controlling interest at acquisition was 224 million. Goodwill calculated under the full fair value method was tested annually for impairment. At 31st of March 2021, goodwill relating to C Limited had been impaired by 75%. Goodwill impairment is charge has been included with administrative expense for the current year, but does not relate to C Limited. Fine. The carrying value in the individual accounts of C Limited as at the date of disposal are listed below. So when we disposed C was having property, plant and equipment, inventory, receivables, payables, deferred tax liability, bank overdrafts. So the net assets on the date of disposal of C was 1220. The loss for the period from discontinued operations in the consolidated statement of profit or loss and other comprehensive income relates to C Limited and is analyzed as follows. So we disposed C at a loss. The total loss, I'm seeing there, okay, there is profit before tax, 48, income tax expense of 16, loss on disposal of 232. So the total loss from discontinued operation is 200. W Limited purchased a 40% interest in an associate for cash on 1st April 2021. The associate paid a dividend of 80 million in the year ended 31st March 2022. On 1st April 2021, W Limited commenced a development expenditure on the product Q. The product is expected to be launched in the year 2023. Shillings 56 million amortization on the intangible assets is included with the cost of sales. There were no disposal of property, plant and equipment during the year, except on the sale of C Limited. Depreciation for the year was 160 million and is included with the cost of sales. W Limited revalued its PPE property during the year. The applicable tax rate is 30%. Part of the additions to the property, plant and equipment during the year were imports made by W Limited from a Tanzanian supplier on 31st December 2021 for Tanzanian shillings 5,400 million. This amount was paid in full. Exchange gain and losses are included in other operating income or expenses. Exchange gain or losses are included in other operating income or expenses. Relevant exchange rates were as follows. On 31st December, Tanzanian 24 was 1 Kenya shilling. 28th February, Tanzanian shilling 27 was 1 Kenya shilling. Required consolidated statement of cash flow using the indirect method for the W Group for the year ended 31st March 2022 in accordance with the requirements of IS number 7, 16 marks. So this one, now I got maneno mingi. It has a lot of information. A lot of information sometimes tends to confuse. So in this case, let me give it this approach. I want to start with the presentation, and I will always advocate students to go for that approach, the presentation approach. We give the presentation as we do the workings. Instead of doing the workings, finishing the workings, then you go to presentation. I fear you might do the workings, then you lack time for presentation. So let's go do them concurrently. Presentation with workings tukisonga hivyo. So right there, wanajiita na W group. So right there, W group, consolidated statement of cash flows for the year ended for the year ended 31st March 2022. Shillings are in millions. Have that one column, then be ready. So be there. People are ready. So we start with operating activities. Operating activities. Be there. So for operating activities, we start with profit before tax. So profit before tax, check profit account. Check profit account. In the profit account, you'll be able to see profit before tax of 1464. There is profit before tax of 1464. However, this question is funny. In note 4, they say the loss for the period from discontinued operation in the consolidated statement of profit or loss and other comprehensive income relates to C and is analyzed as follows. Profit before tax, 48. So that loss, unaona wame separate discontinued operation. And when we were doing discontinued here, we were portioning income tax up to the date. Kama it was disposed after 9 months, we're saying income tax times 9/12. So the tax and any other expense where necessary, if you have discontinued an operation, you need to consider it up to that date. So that 48, you know, it's appearing inside this 200. Discontinued operation is appearing inside that 200. So our profit before tax will be profit before tax from continuing plus the one which has been discontinued, that 48. So it will be 1464 1464 plus 48. When you add the two, what do you get? What are you getting? 15 something. That comes to how much? 1512. Alima there. So that is 1512. So 1512. Give us there. Adjust for. Adjust for. Adjust for 1 depreciation. Adjust for depreciation. Depreciation for the year was mentioned in note number 7. Check note number 7. Check note number 7. So, in note number 7, there were no disposal of property, plant, and equipment during the year, except for sale of sale. Depreciation for the year was 160. Add back depreciation, 160. The sister of depreciation is impairment. Of course, impairment, for you to get impairment loss, we'll have to work out goodwill. So what you got kidogo to? Another sister is amortization. There was amortization in this question. So amortization. Amortization was captured in note number, I saw it somewhere. Note number 6, check note 6. On 1st April 2021, W commenced development expenditure on product Q. The product is expected to be launched in 2023. Shillings 56 million amortization on other intangible assets included in the cost of sales. So amortization 56. Impairment, let it wait a bit. Let it wait fast. Then they said, I could have checked on loss or gain on disposal of PPE, but they said in note number 7, check note number 7, there were no disposal of PPE, so ignore. Once you have captured these 3, of which our impairment is hanging, impairment is waiting for goodwill to speak. So you go back to the profit account, from revenue up to profit before tax, Apple. You check for non-cash items. So from top, from revenue is okay, tick, cost of sales, tick. Other income, toa. So other income, 25. Eliminate. That is not an operating income. The only operating income we leave is revenue, the rest out. Next, downward distribution tick, admin tick, finance cost. Kuna kitu kama hiyo. Finance cost. So finance cost, and this is the approach you give it in exam, 184. You add it back because it was subtracted. So you add back 184. Share of profit of associates. Share of associates. Profits. Share of associates profits, 128. You subtract. That is not an operating income. Correct? Then income tax question. So you're supposed to arrive there. So the only item remaining, right, this one here, cash flow before working capital changes. So that one we can't get until we get goodwill. Impairment. You have to pass impairment, goodwill. So let's check goodwill. First of all, on acquisition of C, then we reconcile goodwill account. So come here and say goodwill on acquisition C Limited. So let's calculate goodwill when we acquired that subsidiary, then we reconcile our goodwill account. Through that, we will get impairment. Otherwise, it will bring problems. So, consideration paid. Consideration paid. If you check note number 1, keenly, you will be able to see consideration being 1056. And the fair value of noisemakers, you will be able to see fair value of noisemakers to be 224. This will give you 1280. Give us there. Good. Then now you less the net assets on the date of acquisition. So net assets. On that date of acquisition, still in note 1, you check note 1 keenly, you will see 980. This means that goodwill was 300. Goodwill was 300. Goodwill was 300. So now you go ahead to check. Now, no, there was impairment. They said the goodwill in C had been impaired by 75%. So you need to subtract less impairment, 75% of the 300. That should be 225. 75% of 3 is 225. Therefore, net goodwill will be 75. Like that. How that? But now let's check goodwill account. Let's reconcile goodwill accounts. So check balance brought down. Balance brought down. Go to non-current assets. Go to non-current assets. So in non-current assets, you'll be able to see goodwill to be 152. Subsidiary acquired came with 75. This one here, they came with 75. So you top up. So after topping up the 75, the balancing figure will be impairment. Impairment, loss, BF. So balance carried down, goodwill 32. So how much is impairment? 152 plus 75 minus 32. No, sorry, a mistake. Balance brought down 152. Subsidiary C was having goodwill of 75, but Nadia, this is disposal. My mind was in that previous question. This is disposal. So when you dispose a subsidiary, you subtract the goodwill. You subtract goodwill, you don't add. because the subsidiary is being disposed. And in that subsidiary, goodwill which is there is 75. So unless it was acquisition, if it's acquisition, you add, disposal you subtract. So how much is impairment? The decrease will represent impairment loss of how much? Somebody? Halima? 45. So impairment loss is the balancing figure, which is 45. So bring here 45. And you add it back. It is not an operating expense. So you add back the 45. Chapa yuki mpaka hapo chini. You give me cash flow before working capital changes. Tell me it will be how much? Tell me it will be how much? So from 1512, make all those adjustments. Then you give me the answer. Mass is getting 1804. Mass is getting 1804. Which has someone to confirm positive 1804. Has to be confirmed by many. So let's bring working capital. Let us bring the working capital. So working capital. Working capital. Inventory, receivables, and payables. Those three. We are not going for working. Sio tunafanya hapa. Inventory. Chukua calc. Haraka haraka. Somebody saying? Kidogo tu. Abri. Communication of the link. Link. Ya kujoin class. Abri. Link. Ya kujoin nama. There are people joining now. But why? Kwa nini wengine wamejoin mapema? By the way, I've noticed some people are joining the class now. What would have been the problem? What would have been the problem? What I hear from those people who came mapema. Rose, we have been waiting for the link. Aye? Allah. Rose, Allah. How? When the link has not been sent, you use the link for that day. Poleni, it never clicked my mind. Allah. That's a total tragedy there. Class started a long time ago. But I'm recording, so you will check the space where you have missed. You will check where you have missed. You will check where you have missed, so there is no big problem. I'm recording. I will share the record. So just connect. I can give you a few minutes to update very fast, then we'll be in the same books. I thought you are aware you are just supposed to use the same link as the morning. So Oleni, so can you update yourself? Let me give you like 3 minutes. You update, you copy, then we proceed. But I'm sharing what we have done, so there is no big issue there. So just copy that very fast. Let's give them a few minutes. Let's give them a few minutes to copy. Let's proceed with the working capital. So working capital, we start with inventory. Inventory at the start was 1320. So have your calculator. Inventory at the start. Inventory at the start. Inventory at the being recorded. Inventory at the start. was 1320. Then we have disposed a subsidiary. What is going on? Yes. Evening, can you write for your people as well? I can see some evening people are also not in class. Barbara, and the for evening, use the same link as morning. If the link is not shared, see unatumia hiyo ingine. So they are still asking. Tell them to, but I will share the video, no issue. So working capital, inventory at the beginning, 1320. Then a subsidiary was disposed. When we disposed the subsidiary, subsidiary was having inventory of 304. Was having inventory of 304. So 1320 minus 304. That one is how much? I want to know whether it's an increase or decrease. 1320 minus 304 disposed. How much is that? How much? 1016. Hey, Kennedy, 72. 1016. 1016, it went to 944. So that's a decrease. So decrease in inventory. Inventory has decreased. It is 1320 minus disposal. Subsidiary, we disposed 304. Then examiner is saying we closed with 944. So we recorded a decrease of how much? We recorded a decrease of how much? Oh, that's what he was saying. 72. That's what Ken was saying. A decrease of 72. Decrease in stock means we are selling. So it remains positive. It remains positive. Let's go to receivable. We do the same thing. At the start, here was straight acquire increase. Because this is 833 as well. So increase in receivables. Increase in receivables, 920 minus, in brackets, 832. 832 at the beginning, we disposed receivables worth to 20. So this is an increase of how much? That is an increase of how much? An increase of how much? An increase of how much? $308. This means we are not collecting. So it is cash outflow. You subtract. Let's go to payables. Payables down there, 328. 328 at the start. We disposed how much of payables? We disposed 80. So 328 minus 80 comes to how much? I want to know whether it's an increase or decrease. 328 minus 80 is how much? 248. We closed with 288. Increase. So tell me increase of how much? Increase in payables. Payables, there is an increase of 288 minus 328 minus 80. Yeah, minus 80. So an increase, people are telling me an increase of 40. That one means we are not paying. So give me cash generated from operations. So cash generated from operations. So operations will be 1804, adjust for those three. Then give me that figure. Then help me with those figures. Give me the figure. Somebody. 1608. 1608. Then you come and say tax paid, interest paid at aina maneno ni finance cost. Just take the finance cost. Where's your finance cost? This one, 184. So this is what you bring here. Then we are going to call it A. We are going to call it A. So let's work out tax. So under your workings, I want us to do tax. So taxation, tax paid, balance brought down. You bring both deferred and current. Deferred was 120. You guys can see. Current was 740. We are talking of 860. Subsidiary left us with the tax. Subsidiary left us with the tax. Deferred tax, they left with deferred tax of 48. Goodbye to them. So this is disposal of subsidiary. So we are subtracting. Also, there are some small issues here which we need to check. Otherwise, there was tax on discontinued operation. Check note 4. Discontinued operation. Tax was 16. Please check. Check. Under note 4. Just check note 4. Check note 4. I hope everyone sees that note. But will it really be relevant to us? What are the note 4? The loss for the period from discontinued operation is the consolidated. No, I'm going to, it is part, actually it is part, because discontinued is this subsidiary. So it is part of this tower. It's part of the tax going with the subsidiary. Because this subsidiary is the discontinued operation. Give me, it should be this way. Discontinued went with the deferred. They went with deferred of 48. But 16 is the current. So it should be this way. Income statement, which is for the year, you say for the year. I did something wrong there. For the year, check income statement, you will see tax of 320. So that is where I need to add 16. 320 plus 16. 16 is current because 48 was deferred. This one here. This was deferred, which the subsidiary left with. So subsidiary left with the current also of 16. So take 16 plus the 320. You get 330, 336. you subtract. You subtract or you add. You add. That is for the year. Yes, you need to add. This one you add. This 16 was charged up to the date of discontinuation. So you need to add as part of tax for the year. Then check for me this note number 7, paragraph 2 of note 7. Paragraph 2 of note 7 is of a big concern to me. Paragraph 2 of note number 7. So I hope everyone is there. They are saying, W Limited revalued its properties during the year. They revalued the property during the year. The applicable tax rate is 30%. No problem, no problem. Check in the P&L, go to P&L, where they have written other comprehensive income. Other comprehensive income. I want everyone to be there. Where they have written other comprehensive, below the other comprehensive, you'll be able to see gain on property revaluation. Gain on property revaluation in bracket, net of deferred tax. Net. Net means they have already subtracted the deferred tax. So we need to know how much is the deferred tax on revaluation. So that one will be part of your tax. So you come here and say, deferred tax. Deferred tax on revaluation will be 30% of 28. But you see 28, they have said net. So you take 28, divide by 70%, which is 0.7, to gross it up. 28 divided by 0.7 to gross it up, then you multiply by 30. First of all, 28 over 7, you divide by 70 so that you gross, because 28 is net. So 28 divided by 70%, first of all, is how much? How much is that? How much is that? 40. Then take 30% of 40. So that was the revaluation itself before tax. So 40 times 30% will be 12. So that is the tax on revaluation. Therefore, your balancing figure here will be tax paid. So tax paid is the balancing figure. Because the balance carried down, check deferred and current at the end. So deferred, 112 plus current 376. 376. So this one comes to, I thought you were adding the closing, 112 plus 376. Najua mmechoka na hii revaluation, deferred tax on revaluation. But ilikuwa na hiccups. 488. You hata mimi kuna mahali imefungua. So balancing figure is the tax paid. This minus this plus this plus this, compare with this. That's the tax paid. How much? Someone to give me the figure? $672. Halima there? 672. So tax paid is 672. So that is what we take to cash flow. 672. So give me A. What is our A? What is our A? What is our A? Our A will be, how much? 1608. Anything unasikia inakalia kila mtu, so you don't worry. Let's just proceed. 2096. 2096 bars. Now, we want to move to investing activities. We want to proceed to investing. As I investing, one of the things about investing is to check. Investing is all about mambo na non-current assets. Non-current assets, acquisition, purchases, all those stories. So I don't see how we can do investing without reconciling PP account. So right here, investing activities. But examiner cautioned us. They said that there was no. Mtu amedispute hii kitu iwezi kuwa 2096. Inafaa ikuwe imeteremka. Kuna comrade hapa amenimislead. Yeah, we are going for prayer break. The answer should be how much? Ali? Nani hiyo amesema? 1608 minus 672 minus 184. Kwani what is the correct answer? Because ama nimeona nini hapa? People are saying 752. So you want to have 20? 752. So people are asking for prayer break, 5 minutes prayer break, which is in order. Let's go and pray. Then when we come back, we do reconciliation of PPE. So I make up of PPE as we go for prayer. So right here, PPE. So property, plant, and equipment. So let's go for prayer break, 5 minutes, then we come back. You can relax. So we are back. I want us to prepare PP account. But this PP, inaka haiko very friendly. It's not that friendly. This PP not very friendly. Because read note number 8. Note number 8 ni kama iko na maneno. Part of additions to the property, plant, and equipment during the year were imports made by W Limited from a Tanzanian supplier on 31st December 2021. Remember, we are closing on 31st March 2022. So 31st December is within this year for 5,400 million Tanzanian shillings. This amount was paid in February 2022. Exchange gains and losses are included in other operating income or expenses. Relevant exchange rates were as follows. So 31st December 24 was to 1, February 27 is to 1. So whenever there is exchange, first of all, you need to check. You need to check whether there is foreign exchange gain or foreign exchange loss. So I want you to do this. Say this. Oversee. Let's start with this. Oversee. See, Tanzania pia ni oversee. So overseas property imported. You can call it whichever name you want. Overseas property imported. So when you import, you will debit PP account. It was Tanzania 5,400. So you will take 5,400 on the date of importation. In fact, inaleka vibaya. Inafaa iwe hivi. On purchase. Yeah, that will sound better. On purchase, you will debit PP Property, plant, and equipment, 54, divided by the exchange rate on that date, which was 24. It was purchased in December. So December, the rate was 24. So in the PP, you need to increase that with that. How much do you get? Tell me what you are getting. $225. You credit payables. Good. Then on payments, when we are paying them, on payments, you will debit payables. You will debit payables 54 divided by payables will remain 225. Payables will be 225 because that was the amount on purchase. So when you pay, you will debit payables 225. You will credit. What will you credit, students? You will credit bank. So bank with actual 54 divided by the exchange rate. Exchange rate is 27. Exchange rate is 27. How much will that be? On purchase 225. Then that one. Yeah, that is true. 200. So we will credit bank with the 200. So it means you credit P&L with exchange gain. Exchange gain of 25. The balancing figure. The DF balancing figure there. And by the way, by extension, can you check your P&L? Check your P&L, whether you are seeing 25 somewhere. It should be there. If you check P&L, they are saying somewhere, other income, this 25, and when you go to note number, I saw it, the last note in note 8, they are saying exchange gain and losses are included in other operating income. So here, as other operating, the 25. So now it is going to be very relevant for me when I'm reconciling PP accounts. Very. Because it happened during the year. So let's kick off. Let's kick off PP. But now, tutakuwa very keen. You know, PP, we're supposed to bring 225, but they say part of purchases. Here you note number 8. Part of the additions of PP during the year were imports made. So part of it means kuna zingine walinunua. So you are going to be very keen. Don't just throw in this 225. It's just part. It means there are some which were purchased. So let's work out to see. Let's work it out now to see. Let's work it. We just proceed with it as a working, but now we can bring it under different heading as PP accounts. We can call it PP accounts. Just one second, I give someone this pen to help me refill. All right, so balance brought down. Check PPE, check property, plant, and equipment. Hizi maswali siku hizi wanazikaza. PP 3088. I hope you can see that. 3088 less subsidiary. Subsidiary left Subsidiary left with some PP worth 840. Check note 3. Additional information number 3. 840. Less depreciation. There was depreciation. Less depreciation. So depreciation was 160. It was mentioned in note number 7 as 160. So that one you're supposed to subtract. You add revaluation gain. Add revaluation gain. You need to add revaluation gain in full. We divided by this somewhere and we got 40. So revaluation you need to add there, 40. Then, you know, it will be very wrong. Itakuwa mbaya sana. You know, these people when they purchase that PP, wanafaa iongezwe, but sasa siwezi kuongeza. Balancing figure yote, ita include hiyo. But we need to be very careful. It was 225. But the actual cash we have paid, we have only paid 200. So 25 is again to us. But it is part of PPE. PPE which came in should be 225. But we never paid the whole 225. We played around with exchange rates until we ended up paying 200. But in our financial statements, when we check the working we have just done, PP account has remained with the 225. So we select hapa imports 225. Hapana. Yes, the value is 225. The value should be in your books is 225. But what we have paid in cash is 200. So you come here and say, add non-cash. Non-cash, that gain. Non-cash additions. Non-cash additions. The gain on exchange. Gain on exchange, 25. It made our PP to go up, but we never paid. Therefore, so what we paid is 200, which is going to form part of the balancing figure we are going to get here. So acquisition is the BF, the balancing figure. So compare with the balance carried down. Hapo wametufinya sana. Compare with the balance carried down. Balance carried down, they gave us 2816. 2816. So kazi kwenu, unajua kazi yenu hapo vizuri? $663. So we acquired 663. Why? I hope you have understood what I've done here. You know, they say the part of acquisition is through those imports. I see import was 225. So examiner had to fix. This one is more than 225. That's what they're saying is part. So instead of the 663, there is that import. But if we fail to remove the 225, the 25, it will have gone up. But on payment, we paid 200. We never paid those people this 25. This 25 became a gain. So we never paid for it. Remember cash flow, we want to know how much went out. So that is why, yes, the value has gone up, but that one we never paid for. It was just as a result of the gain. So acquisition of PPE, 663. Cash outflow. Aware. Usually, I underrated it. I think I underrated it. It is not very friendly. Then check the next item under non-current assets. The next item. The next item is goodwill. Goodwill tulimalizana. Goodwill, we finished. There is other intangible assets. You have to check it out. That is a working we have to do. Intangible assets, write it as a working. Before I have Irene. Revaluation gain. Irene maybe where will put your late. You know what will be late. Revaluation gain, Irene, check P&L. Let's go to P&L, Irene. P&L, under P&L, there is somewhere imeandikwa other comprehensive income. Other comprehensive income. Other comprehensive, you are seeing gain on property revaluation in brackets, net of deferred tax, net. Then tax rate, they are saying in note number 7, the last bit of note 7, Irene, they are saying that tax was 30%. So it means we have to close back revaluation. We have to close back the revaluation to get the total amount. For the assets, you don't, ukirevalue land, weka tax, weka yote. So 28 was net, so divide by 70% to close it back, which is 40. So 40 ukitapa na 30%, unapata tax ni 12. Tax is 12, then you remain with 28. So Irene, I hope you have understood. You have understood what happened. We did it somewhere, that is why I just moved straight. But if you never got it, I hope now you're okay. Correct. That is it. I wanted us to check on this intangible assets. Intangible assets. I don't gonna give it any space. Working, intangible assets. Intangible assets as a working. As a working. So you say balance brought down. Balance brought down. People are ready? So balance brought down. Intangible brought down was 216. Brought down was 216. Then they said there was amortization. Check note number, we saw amortization somewhere. Note number 6. Intangible assets were amortized. So amortization, they have said it was 56. Meaning we are expecting a figure of how much? We are expecting a closing figure of 216 minus 56, 160. But Mr. Examiner is comfortably telling us that the closing balance is 815. That really? No, 296. He's saying it is 296. So balancing figure is an increase. It means there was acquisition. Acquisition of how much? There was acquisition, that increase. There was acquisition of 136 roses. Of 136. Why should you not bring it here? Bring it. Acquisition of intangibles. Intangibles, 136. That is cash outflow. Yes. Read the thoughts. So that is 136, cash outflow. Next item under equity. Next item under, not equity, kwa nini napenda equity? Under PPE, investment in associates. I want to check this working. Investment in associates. Investment in associates. Balance brought down in associates, 0. Check with your own eyes. 0. There was no investment. Haya, twende kwa notes. Kwa notes kuna maneno. Before we go to notes, check P&L. Check profit account during the year. So P&L, share of associates profits. Parent got a profit from associates of 128. You want to see how they got the final figure? 128. Then we go direct. Yes. Now, let me call you at 8. I'm still in class. Yes. So now, let's go to note number which one? I saw a note where they paid dividends. Other him the year note. Which note did they pay dividends?
5.
Yes. Which notes? People are saying note 5. Thank you. Note number 5. They pay dividends of 8. Hello. So dividends paid. Dividends paid. They pay dividends of 80. When you pay dividends, you reduce that investment. That is how it goes. You need to reduce that investment. Ama ilikuwa, oh yeah, sawa. By the way, what you're saying is correct. Those were DM, direct inbound. In associates, we acquired, yeah, it is true. We acquired 40% in that note 5. So we cannot take the entire amount. It is 40% of 80, which is 32. I agree. Which is 32. Therefore, we are expecting, when you pay dividends, you don't add. When you are paying dividends, you don't add, you subtract. We are expecting a closing figure of 128 minus 32. We are expecting 96. Skip one line. Examiner subsequently closed with an investment of 816. 816. So there is an increase. Increase means they purchased more investment. So purchase of investment. BF. Balancing figure. So give me that balancing figure. They purchased more investments. So people are getting 720. People are getting 720. So you will come here and say acquisition of investment. Well, my space is not sufficient. Acquisition of investment in associates. Acquisition of investment in associates. 720 cash outflow. But we received dividends. This dividends of 32, we add it as part of cash flow. So dividends from associates. Dividends from associates. We received 32. The 40% of 40% of 80. They declared 80, so we were supposed to receive 40% of it. The only item remaining, which I want to check, then we are done, is the amount we received when we disposed the subsidiary. It should come here for investing. In that other question we checked, but it was not there. So I want us to check the amount we received when we disposed the subsidiary. So let's check note number 3. Actually, I've been trying to, Rose, I've been trying to check. Rose, I hope there is better. I've been trying to check the amount we received when we disposed the subsidiary, but I could not see. So Rose, I hope that is okay. I've been trying to check the amount we received when we disposed subsidiary, but I cannot see it anywhere, which makes the question to be more complicated, but on my side, it is more better. It is more better because it's a concept which I really want you to understand. I want you to understand. So the examiner in note number 3, sorry, they never mentioned how much we received when we disposed the subsidiary. So we cannot dispose subsidiary for 0. Impossible. So I want us to do a working to check where in a question whereby, and of late I've seen them doing that, they don't want to tell students how much they received when they disposed a subsidiary. Remember, your subsidiary is an investment. So when you disposed an investment, the amount you receive should be part of investing. So we need to check here, under investing, the cash received on disposal of the subsidiary. And I've realized nowadays they don't want to provide or try to pay students. So if in the event they fail to tell you, then you get it this way. Good job. This was full method. In just a minute. So I want us to start with NCI for a reason. Nikishafanya hiyo step studio mtaelewa why I wanted NCI. I want you to get for me NCI, the value of NCI on the date of disposal. It is going to be a bit to be relevant. So write for me there, NCI on the date of disposal. So that is going to be our working, correct? So I want us to get NCI on disposal. NCI on disposal is going to be a bit relevant in what I want to compute. For now, I cannot say how, but once we compute, you will see why I wanted it. You will see why I wanted it. So NCI on the date of disposal, you will calculate it this way. fair value on acquisition. When we acquired the subsidiary, check note 1. Yeah, check note 1. Non-controlling interest, if you check note 1, you will see 224. This one will recover kamba. Then to NCI, you add post-acquisition. So say add post-acquisition net assets. Here we don't talk of profit, we talk of net assets. Net assets are and profits too. Parent had acquired 80%. So minority, we take 20. So post-acquisition, check the total net assets on the disposal date, note 3. Total net assets. In fact, I want to challenge you there. How much is the total net assets on the date of disposal? Somebody? Somebody? How much are you seeing? Mko standby. Customer walete hii kitu. 1220. 1220. Minus 1220 minus on the date of acquisition of that subsidiary. On the date of acquisition of the subsidiary, note 1, when we acquired the subsidiary, net asset was 980. So on acquisition, 980. Disposal date, 1220. Get the difference percentage. That is what you add to these noise makers. How much? How much do you add to them? How much? 48. The only thing you do is to less impairment. Impairment, how much was impairment loss? Please check for me so that they need to suffer 20%. 20% of impairment. How much was impairment? How much was impairment? Impairment ilikuwa 225. Basi ilikuwa hivyo kidogo. Kama ile See, 45, I think, should be for the NCI because when we were calculating goodwill, goodwill. Go back to where we calculated goodwill. I don't have those figures. So, nastaki tupotea hata kidogo. Kurudia hizo vitu inaweza kusumbua ubebe mkono juu. Because personally, I remember impairment was 75% of goodwill, which came to 225. Yes. Ebu check it keenly. Check for me impairment keenly. I think impairment came to, kama hiyo ilikuwa nini? Impairment was 225. Kindly check. Yeah, people have seen it. It was 225, not 45. So 20% of 225. Oh, how many will check in here? You are gone ahead of the trend of 45. I don't know. Impairment was 225. If you check. Therefore, NCI on the date of disposal is this plus this minus 45. This one is a rudiwa. It is not a normal question. The only wacha ni mute kwanza. Wacha ni stop recording so that I talk something bad. Was his scheme on it. So let's proceed. So we are talking about how much? The total. This plus this minus 45. Somebody to give me an answer. So just bear with the question. We don't have any option but to comply. 227. So now I want us to check gain stroke loss on disposal. On disposal of C limited. You see, this is here, this one will be a complete, almost 10 marks. Gain or loss on disposal. But here, tunang'ang'ana nayo, ndio upeleke huko. Hata unaweza kosea. Hata kwa ofisi hizi vitu hakuna. Why are we struggling like this? Haya. Haya, so gain or loss on disposal, you remember, we start with the disposal proceeds. Disposal proceeds. Imagine, this is what I wanted to put here. Your nimalizana investing, which have been denied. They have not given me this figure. So this figure is making me to do a lot of stuff. Then you less net assets. Net assets on disposal. So on the date of disposal, net asset you're able to repair 1220. Net asset was 1220 of that subsidiary on that date of disposal. It was 1220. Yes. Yes, it was 1220. Good. So we can proceed. We can proceed. Then goodwill, less goodwill. Goodwill on disposal. I remember goodwill was 300. We impaired 225. So we remain with goodwill of 75. Then noisemakers, less NCI on disposal. NCI on disposal, 227. They are eating part of these items. So can you give me this? 1220 plus this minus 227. Tell me what you are getting. Tell me what you are getting. Hey, nilifikiria hii shortcut ya kwenda direct ndio rahisi. Kumbe working zilitumbaje huku mbele. How much? This plus this minus this. Rose 1068. So what we have been denied, they have denied us this proceeds. And this proceeds is what I'm looking for. So this minus this, you get gain or loss. But already they say they lost. Check note 4. Check the breakdown in note 4. How much is the loss? You can be able to see it. Check note 4. How much is the loss? Note 4 there. We were given. They said already they lost. Yeah, Ross, they lost 232. So loss on disposal, they lost 232. So X minus 1068 is 232. Kidogo, Abdi. This minus 1068, you get a loss of 232. So what is X? X is the balancing figure. Abdi, I'm coming back to you. Balancing figure is how much? And imagine that is, but meanwhile, as you give me, Abdi, I can answer it very fast. We cannot less goodwill because on disposal, we check what was there. There was net assets, they had their own goodwill. So to get the loss or gain, you check what we had in that company. We had net assets, we had goodwill, but minority had interest in that company of 227. So you cannot subtract. So Alima is giving me 1300, which Rose has also confirmed. Rose has confirmed that. But the rate at which naona watu wakinyamaza haikai ukweli. Rose hizi kwa because unaona ikiwa 13 hii itakuwa positive. So be keen. If this one becomes 13 minus this one itakuwa positive. And we don't want it to be positive. Irene, 836. Yes. 836 might be correct. Dennis no 836 minus 1068, negative 232, yes. So here we must have 836. So I want to delete here so that I finish investing. So andika hapo. Andika hivi. Cash received kidogo Rose. How please explain that? Rose hapo sasa ni watu wa mathematics. Hebu hata tuende, wacha tukopi watu wa maths. X, wacha tukopi watu wa maths. X minus 1068 is equals to a loss. Loss is negative minus 232. So Rose, hii ikivuka huku tuliambiwa inakuwa positive. Ukipeleka hii side iwe positive, will it be 836? Rose, confirm for me. Will it be 836? Ikivuka hiyo side nyingine iwe positive. Rose, confirm. Yes, good. Good. So right this way. Net cash received on disposal. Net cash received on disposal. Net of cash disposed. Andika hiyo kizungu hivyo. Kizungu serious. Net cash received on disposal, net of cash disposed. Yes, that is the English. Well, I'm really exhausted. All right, so these people received 836. They received 836. Now you keep on check. There was bank overdraft. Karen, this is continuation of investing. I don't have a space for investing, so I've just carried it the other side. Sure. So they had bank overdraft. Check the items we disposed. Check the items we disposed. So walitulipa, they paid us 836 na tukawachia deni. Tukawachia deni ya 16 overdraft waende walipe. So you add 16. It is a plus, not minus. Overdraft you need to add because umewachia deni. Wamekulipa 836 na wao umewacha wasort out 16. I always like bringing it this way. Someone is giving me an answer. I like bringing it this way. Which way? Rafiki yako amekuambia Elijah 852. Rafiki yako amekuambia hiyo nyumba na kuachia na ama na kuachia mpaka deposit. Wewe kitu unafaa ulipe rent ya hii mwezi wewe uendelee kuishi. Na ukamuuliza ngapi? Anakuambia wewe lipa 10,000. Then wewe umelipa 10,000. Ukienda unapata alikuachia token. Ile token yake hakukuwa amelipa, iko na deni ya 1,000. So you end up paying 11. You know, kama mnaacha token hajalipa hiyo ni negative. So negative you add. But if it was cash available, you subtract to reduce because umeuza mpaka pesa yako. Correct. So Kusha, we are done with investing. So can you adjust the entire investing and tell me the answer? Adjust the entire investing and give me the answer. Hey, wait. Hawa watu walikaza kama kwa hiyo swali. I can tell. Hapo ndio mwalimu anasemanga sijui nini nilipeleka kwa hiyo swali. It becomes tiresome. But sioni financing ikiwa stressful. Hata watoto wanashtuka na hii swali. It's not common. So how much do we get for investing? Victor, you are around 635. Susan is saying 635 negative. Susan is saying Alima. Negative 635. Rose ama ndio ni kuseparate na Rose mwingine. Wewe ni kuitange.
Sasa sijui amefinya nini hapa.
Mute everyone. Rose, Wanjiru ni Shiko ama Shiro, so that ni kuseparate na the other rows. Haya, tukataje financing. Shiro, sawa. Hiyo jina zaidi liko sawa. So financing activities. Tuende financing. Hauwezi toka bure kwa hiyo swali. That one I assure you 100%. You can't. Wacha tumalize uone. You can't. Whatever is kinyene kanyage na kanyagia kila mtu. Iko na uzito mingi because even me I can feel it. So everyone will feel. Unaweza pata hata kwa mtihani kinaumana. Unasikia 1 tick 4 marks. Haya. Twende kwa equity. Ukifika financing, you go to equity. So let's meet in the equity. Chap. Let's meet at equity. Tupatane kwa hapo kwa nyumbani ya equity. People are already there. So equity ordinary share capital beginning. God is good. Beginning 800, closing 800. They never issued shares. So hapo hakuna kitu. Revaluation hatuletangi hapa. Revaluation you just adjust in PPE. But we can confirm 192 minus 164 is how much? Tumemaliza hiyo swali, tumemaliza. Sasa tuacha tucheze tu na wao kidogo as we finish. What is that difference? What is the difference there? 192 minus 164. That increase, Elijah, and the rest 28. Yeah, so that's the 28 for revaluation. Divide by 0.7, you get that 40. But we don't bring revaluation up for cash inflow. We are just on PPE, then story ends there. So here, out. Retained profit, yes. You reconcile retained profit to know the dividends paid to the parent. So it's really working outside, I can do it here. So dividends paid. Holding company. Dividends paid, holding company. We can do it here. Here is working boom. We revise this one properly. These are some of the questions on Nigeria. 2160 plus check profit for the year attributable to holding company. Profit for the year, not comprehensive. You know, comprehensive for a revaluation. Revaluation hakuna pesa. So check profit for the year. Tell me how much in your P&L. Check your P&L and tell me how much profit for the year attributable to owners of the parent company, the holding. Susan, 856. Someone else? Mtu anaona ngapi? 856, correct. 856. So this one should be the closing. Tukipata decrease, that decrease is dividends. So minus the closing, 3016. So how much? Decrease in profit is dividends. So you always take beginning, during, compare with the closing. How much dividends are you getting? How much dividends are you getting? Na unasomanga saa ngapi? At 0. 21? Yeah, it can be. So there is nothing. Yani, tumejisumbua na kitu hakuna. There is nothing. What time do you read? Because unasoma kila saa. Because you cannot cheat me that after this immediately mtu atasoma. Then tomorrow tena mnago kuna class 7. Sijui 7 mpaka saa ngapi. Maisha imekuwa ngumu. But I think Casnem should do something. These 2 months, he kitu hata si 3, it's just 2. It is not sufficient. not sufficient at all. Especially for professional, this thing is not sufficient. 3 months ni kidogo. But if you complain wanasema, you should prepare for 6 months. Then book when you are ready. So they are saying shida ni wanafunzi wa Cashflow. They are always ready. Hata mchana ikiwekwa every Friday, people will be booking for those exams. Alright, let's go to NCI. We also check kama NCI wali declare dividends. That one I must do a working. I have no option. So I have a working outside there. I will delete it. NCI. I have NCI there. Hapo kwa equity, check NCI hapo kwa equity. Balance brought forward. So balance brought down, non-controlling, something 680. Please check to confirm under equity. Under equity. Under equity. Then you less disposal of subsidiary. Disposal of subsidiary. When we dispose subsidiary up there, I still remember it was 227. We just calculated up there. The subsidiary disposed, minority were having an interest of 227. Hiyo imeenda. Then you add for the year. For the year, P&L. Can you check for me down there? Attributable to NCI. Attributable to NCI. Attributable to NCI. Hiyo swali ni kumaliza tumemaliza. How much are you seeing with your own eyes? Mercy? 88. Kila mtu ameona 88. Lakini watu wa evening, well, not evening, early morning, I think mmesoma sana FR because from Saturday last week mulikuwa na FR Saturday, Sunday, Monday, Tuesday, mulipumzika Wednesday peke yake. Mulipumzika Wednesday peke yake. Thursday? No, mulipumzika Thursday, Friday. Ni maisha yametoweka hapo. 88. Skip one line. Balancing figure here is going to be dividends. Dividends paid. BF. So compare with the closing. Balance carried down. Balance carried down. Balance carried down, they gave us 512. They gave us 512. So these people paid how much? These people paid how much? Honorable members, Gap. Shiro, 29. They paid 29. Let up. Dividends. Dividends paid. Minority, 29. Cash outflow. Equity is over. Very good. Equity is over. We are all remaining with long-term loans. Hiyo imeisha hiyo. Hiyo imeenda. Long-term loans. At the beginning, loan was 960. At the end, make sure unaangalia subsidiary. Make sure you check the subsidiary. Make sure you check the subsidiary. So, was there a loan which the subsidiary was disposed with? No. There is no loan which the subsidiary was disposed with. So it's a direct comparison. How much and what happened? I'm waiting for that answer from you people. How much? When you give me 10, you tell me 10, blah, blah, blah. Nipatie your answer. How much and what happened? How much and what happened? So Halima, loan repayment of 272. Susan, repayment of 232. It has reached a time where I must believe in your wording some figures. So loan repayment. Yes, this is a repayment because loan has gone down. What can make a loan to go down? Unless it is a waiver. You become a waiver, 272. We are done. Give me C. We are done with the financing. We are done with financing. So how much is our fee? How much is our fee? Hata kama hiyo swali ni ngumu, see loan repayment from the back. You cannot just get zero. It's impossible. So C will be how much? These two negatives. These two negatives will be how much? $301. So net cash flow will be A plus B plus C. Can you do that? Can you give me the aggregates? You have the A was 752, B is negative 635, 301. Victor is giving me, no, Victor is asking a question. So I want to see, Victor is asking, what about, Victor, you are giving answer because what you are giving me is what people are giving me. But if at all you're asking of finance cost interest, we took it under working capital opportunity. And I will keep on saying, interest, you have freedom to take it anywhere, wherever you want. There is no restriction. In fact, interest and dividends, you can post them anywhere, provided you are consistent. So people are saying negative 184. Cash and cash equivalents. Cash and cash equivalents brought down. Cash and cash equivalents brought down. So here ina maneno mingi, bank overdraft nini, straight enda kwa current assets. Go to your current assets. You are seeing cash and cash equivalents to be how much at the beginning? Beginning cash and cash equivalents, which you are seeing with your own eyes, is how much? How much are you seeing? 344. I've also seen 344. So bring here 344. So now the big question will be, if you take this plus this, will you get the cash and cash equivalents carried down? That is the big question. Minus 84 plus 340. Will we get what they are giving us as carried down? Please confirm. Hey, kama ikuji sisi tumechoka. Halima says yes, it comes to carry down, which is 160. So we are accurate. So if we are accurate, you say, so Susan and Halima, you don't say yes, you say as usual, because that is where we are. You say as usual. So that is it. That is it. That is it. That is it. So we are expecting a question. And by the way, hey, attention. Stop what you are doing. Serious attention here. These two figures are always marked. These two figures are always marked. Always marked. These last two. So what I always tell students, rule number one, whatever has been posted by a student must be marked by the examiner as either correct or wrong. Anything written by a student must be marked. So in cash flow, these last two are marked, regardless of what is here. Even if you get here wrong, but this one should post correctly. Because getting cash equivalent is not easy, because sometimes it requires also reconciliation. Remember what we did. So anybody who posts these two figures, they must be marked. And therefore, in exam, in exam, ukifanya hapa, ufate A plus B plus C. Ukifanya A plus B plus C, unapata 10, positive 10. Now, ukiangalia brought down 344, closing 160. There is no way 10 plus this can give you 160. So, itabidi usipost hii kwanza. Don't post this 184. Ukifika hapa kwa A plus B plus C, leave it pending. In fact, Don't even add because it will prepare pressure bure. You just write A plus B plus C, leave it pending, bring this one, then you say X plus this one is 160. Fix there negative 344. What examine and jipange huko ndani. So you will end up getting those two things. So here fix this one I tell student. And the truth be told, after mimi nikifanya hiyo exam right now, I will not get everything here correct because nikiwa peke yangu instead of 272, you'll find me writing 227. Just normal errors. Hakuna mtu ana error. Hata letting mwenyewe ukimpea hii kitu hawezi pata mingi because amesahau. Instead of writing 344, you will end up writing 434. Is normal. So getting yourself reconciling that thing because you are beating time will be very hard. Ni ngumu. So usiseme juu mimi ni pro, wacha sasa hii kitu lazima ni add na nione kibalance. Itakupea a lot of joto mingi. So wewe fanya hivi, fika hapa kwa A plus B plus C. At least something which you don't know should not stress you. Wewe wacha hiyo kitu, weka hizi mbili, work backwards, get that figure. Songa mbele. That is how you should go about it. So you end up here, they only required 8. They required 8 things at 2 to get 16. It was 16 marks. Utapata, these 2 you will get. I know the other one you will get is this one. That is 3. You go to working capital. Working capital, you will get. Working capital again, you will get these ones. This one I know. 1, 2, 3. Na hii interest pia utapata. Hiyo ni copy paste kutoa huko na kuleta hapa. This one you will get. Then huko kwingine kwa adjustment, depreciation nini. Hiyo swali utapata yote. Hii madogo na hiyo unaona hapa sijui what, sijui foreign exchange. Wacha na hiyo kitu kabisa. Jiconsole. Hakuna mtu anapata. Wewe jiconsole hivyo then you are good to go. But ukingangana hiyo kitu yote unaona kusumbua sana nayo. Especially ukiwa kwa hii class, kwani kitu inakusumbua nani huyo atasikia hiyo kitu apart from you? Wacha na hiyo kitu inakusumbua. Our next question. Swali inasumbua. Good question now. Don't leave. There is something I want us to agree. So watu wakiagree kama wewe huko, then useme you are not consulted. Sasa itakuwa mbaya. Hapana, wacha si kila siku ni mimi na kuja na swali. Bring any question. Wacha ikuwe hivyo. Bring any question. At least I can give you that opportunity. Isikuwe kila siku ni mimi. Because tumefanya acquisition, you know I could have restricted you on this one because I wanted disposal. But we have done acquisition and disposal, so we can do any other. Bring mtu wa kwanza kusema hiyo ndio tutafanya. Though atufanye sahihi. Someone to post any question? They're just the same. Chukua tu moja urushe hapa. The two concepts, there is no concept I'm looking for. The two concepts I've brought, so there is no problem at all. So pick any question of your choice. Which one? Anyone who has come across any? Cashflow inakuwa tu kila mahali na misingi once in a blue moon. So wewe funga tu macho na ufungue paper. Hiyo setting wewe kwa hiyo cashflow iko hapo. It is everywhere. Cashflow iko every setting. So I wait, then we agree. As you give me the question, no, let us kwanza ndio niswa distract. Give me the question first. My legs are very tired. Nobody is giving me a question. We are many. We should be getting a question right now. Randomly, we pick random. So thank you, Monica. So Halima, pole. Monica ndiye ametangulia. Abdi, Monica ndiye ametangulia. So asiseme kwa nini au wengine. Shiro, sasa hiyo yenyu itakuwa assignment. So I will go with Monica. Monica selected December 2021. December 2021. Question number 2. December 2021. Question 2. Hizo zingine zote umesema ni assignment. Haya. I want to agree on one thing. Then we are good to go. We are good to go to end the class. So what I want us to agree on, let me stop recording.